Good morning. It is Sunday, March 26th, 2023. Got a lot to get to today, as you can see by the number of tabs open. So I'm going to go pretty fast. I think this is a really important video, and I'm going to do my best to condense it. So, again, if you find value in this, please like and subscribe on YouTube. And actually, I'm looking for a few more Trading Lab members, people that are higher level that can contribute to the conversation. So if you know somebody, please introduce them. But let's get right to it. So starting off, the next 100 points in the S&P, the next 50, 60 bucks in gold seem pretty random to me. Clearly seems like we're in a range in a lot of things. But that being said, I think it's important to not ignore the fact that markets were actually up last week. So remember, last weekend, we're in a crisis, banking crisis. What's going to happen with Credit Suisse? The weekend before that, it was Silicon Valley Bank, right? So we have been hit. The market has been hit by a lot of negativity, a lot of fear. And the macro wall of worry is, it's so extensive. I can't name it all, but let's start with hyperinflation, World War III, banking crisis, central bank rate hikes, Russia and China cozying up, Iran sending rockets to U.S. bases in Syria. I mean, we could go on, right? It's just never ending. The wall of worry, all the negative news, right? And yet, stocks were up last week. So this is one of those moments where you either choose to be committed to being right about being negative and seeking confirmation bias in tweets and news headlines, or you choose that you want to make money and you don't care if you're right or wrong. You don't know what's going to happen next. You just choose to trade the charts and the price action, right? And so this is one of those classic moments where everybody gets to choose, do I want to be right, quote unquote, right about the way I have it, the way that I'm confirming my biases, my negativity that's being confirmed everywhere in media, or I want to make money and I just forget about being right about stuff and trying to guess the future, right? I'm just going to be focused on trading what's happening, right? So Friday was one of those great examples where support held in the morning and it was pretty strong uptrend throughout the session in stocks, and we broke this trend line, right? So important context against the backdrop of major negativity everywhere. The S&P has put in a series of higher lows, and it broke back above the important 4,000 level on the futures late in Friday's session, not to be ignored. Gold, could it go to the purple line? Could it go back above the red pinkish line? Yeah, yes to both. Tough spot here, not high percentage either way. But I'm going to get into later in the video, bigger picture, why this is an important monthly close for gold. So the next 100 points in the S&P seems pretty random, but if we assess that stocks held up last week against extreme negativity, tons of bearish headlines, fearful headlines, it seems that sentiment is depressed enough that an improbable rally could take place in the near term. And maybe some quarter end shenanigans rebalancing could contribute to that quote unquote improbable rally. All this money in money market funds on the sidelines, fearful money. I mean, all it takes is 100 billion of that to come back into markets, and we go straight up, right? We go up huge. So yeah. Another thing, the market peaked a little over a year ago. Fed's been tightening for about a year. Yes, it's been an aggressive tightening cycle. We went from 0 to 5% in record time. no doubt. But when you think about this, 2020 and 2021 were great years in many asset classes, in the broader market, in real estate. And literally, it's just we're like a year away from that peak, and everybody's crying and begging for bailouts, government backstops, government intervention. Elon Musk saying Fed needs to cut 50 basis points at the next meeting. I mean, it's a massive freak out from the rich and entitled in the US. This is crazy, right? It's surreal time, but it just shows you how increasingly unstable the financial system is and how much new liquidity it continues to need. You got to feed it. You got to feed the beast, right? Um, yeah. I mean, it's surreal, right? That all these guys, these rich guys, are begging for government intervention. A lot of them, like David Sachs, laissez-faire, right wingers, and now they want all this intervention to backstop their wealth. It's crazy. But some of them have some good points because what's happening with the regional banks in the U.S. without a higher FDIC guarantee is they're losing all their big accounts to the money center banks. Yeah, they still have a lot of $5,000, $1,000 checking accounts, of course, because those people are not wealthy enough to care and they're covered. But it's going to hurt because those $1,000 accounts aren't big profit centers for banks. Let's just be honest. Yeah, they make a little money for the banks, but it's the big accounts that take $500,000 mortgages, $1 million mortgages that have credit cards with $25,000 limits, et cetera. That's where the real profitability lies. Small business loans, stuff like that, right? So they're losing business. So there has to be something done here to level the playing field, or else we're just going to see a lot of banks get gobbled up, and it's going to be like Canada, where there's like 5 or 6 big banks, and that's it. So something's going to happen here. Change is definitely at hand in many areas of the financial system and the economy. We live in an increasingly unstable system, and I continue to espouse this accelerating booms and busts theme, right? So we had a COVID bust, February, March 2020, major bust, rapid bust, vicious bust. Then we had the pandemic boom, central bank liquidity, fiscal stimulus, second half of 2020 throughout 2021, right? And 2022 was largely a bust across many areas of the market, asset classes. And in many ways, that's continued into 2023. The banking system now busting, right? So we're in the bust phase, and we're pretty far into the bust phase. So at some point here, we're going to transition into a boom again if this theme continues. Boom bust, boom bust, boom bust, and the central banks are constantly chasing their tail in this boom bust cycle, right? So now we're in the bust phase where the central banks have to stop tightening and then probably in the second half of this year start easing, and then there'll be a boom in some way as a result of this. I'm not going to go into the whole Fed statement, but you can read it for yourself. Major hints all throughout the statement about a pause coming. They basically say they have no idea what's going to happen next, so they're opening the door to whatever in May. There could be a pause, it could be a quarter point rate cut, maybe some miracle. It could even be another quarter point hike if everything stabilizes and inflation continues to run hot. They have no idea what's next, but the market's saying, the bond market's saying that the Fed is going to be easing 4 rate cuts by year end. By some accounts, I tend to side with the market and not with what Powell's saying about his base case, right? Another thing that isn't talked about much is AI, automation, and aging demographics. People having less children offer powerful deflationary headwind for inflation expectations. We have no idea how AI is going to change the world at this point. Automation's already changing it. Less cashiers needed in grocery stores, robotics in manufacturing. Um, you could go on. Self driving, right? I mean, soon all these Uber drivers are going to be out of jobs. This is a big freaking deal, and it's coming down the pipe here pretty fast because technology accelerates, right? Um, how's that going to shape monetary policy? How's that going to shape inflation expectations? That's a big question mark. And a lot of people making a big deal about China and Russia, the petro yuan. Uh, seriously, who's gonna who which people that are not Chinese or Russian are going to go put their money in China and Russia as a result of this? Are the Saudis even going to have money in China or Russia? Do they feel they can trust either of those countries? I think that it's a little overplayed, but it's interesting to look at how the world is bifurcating. On the one side, we have two totalitarian states, China and Russia, um, that absolutely do not enforce the rule of law on either side. Basically, it's one man says what is and what's going to happen. Both men are extremely rich. We have no idea even the extent of their wealth, but it's been stolen from the public sector. And then on the other side, we have the West, the woke, the senile, the narcissistic, the incompetent West. Biden, Trump, Trudeau, Macron. I don't even know the guy in the UK's name, right? But he's woke, right? Um, and then the fact that I don't even know the UK guy's name shows, well, he's very new, and the UK is increasingly irrelevant, in the world. Sorry to say, but that's just the reality of it. Um, but Biden is Biden and Trump are sad that this is the leadership, right? We need younger people with new ideas. The time to let the old men retire and go to the senior living homes. Above 75, I don't know if you should be even allowed to be president, right? We need younger people with new ideas, fresh blood, and Biden is painful to watch. Okay, but this is the backdrop of the world today. So the bear case: hyperinflation, World War III, end of USD as global reserve currency, and I could go on. Banking crisis, Deutsche Bank is next. Blah blah blah. The bear case is long and numerous. Bull case: Ukraine peace deal. Nobody's thinking that's going to be possible, right? That's impossible. Everybody agrees that's impossible. Well, what if it happens? Inflation cools. Nobody thinks inflation is cooling. Everybody's talking about how expensive everything is. And inflation is something that we've all been yelling about, shouting from the top of the rooftop for the last year. What if the Fed eases? Money market funds are washing cash on the sidelines. Lot of pent up demand there. What if that money comes back into markets? Sentiment is very depressed by any measure. Nobody is bullish here. Oh, election season is coming up in the US. What happens in the year before the presidential election? So we're not quite at that 1 year mark, but we're getting closer. Well, we have seats in the House up for re-election, Senate seats up for election, and then the president is up for election, right? So all these politicians start pandering. Of course, they're going to pass a new debt ceiling. They're going to raise the debt ceiling, and they're going to slip in a bunch of stuff in various bills that nobody reads for more spending. And they're going to say, oh, we'll balance the budget 5 years from now. And that won't happen, right? It's the same thing. It's all a big play, right? Well, this is a royal flush for bulls. I mean, if all this happens and this doesn't happen, holy shit. Where could the stock market be at the end of the year? So really, like the bear case is kind of like an end of world thing, right? World War III, hyperinflation, end of the dollar system. That's kind of end of the world stuff. You going to bet on that? Or are you going to bet on something slightly more optimistic, right? So now we get into it. We talked about the S&P. So again, if I just look at the charts, I think my bias has to be higher. But at the same time, I think the outcome next week could be pretty random. Okay, I have no strong conviction here. Period. Right. Looking at the weekly chart, this is coiled up. We've been consolidating in this tight range. I mean, basically, stocks haven't gone anywhere for months if you just look at the big indexes, right? But underneath the surface, there's been a lot of movement. I mean, look at the move down in the Russell 2000 since the beginning of February. This has been a very big, sharp drop in small caps. So people have kept their money more in the mega caps of the S&P, sold out small caps. But look at what happened on Friday. So 170 is obviously a big support level in the IWM. And what happened? Support held after multiple tests last week and then a bullish candlestick. This is also a failed breakdown setup. So just very simply put, price broke under 170 at the end of last week, but closed back above it. The failed breakdown setups have been some of the best setups in this market. So let's pull this out a little bit. Yeah, so if we just look at the IWM, the low was in June. Higher low, higher low. So higher low as the Fed has hiked to the moon. We're at 5%. Banking crisis, bank failures, Russia, whatever, moving nukes to Belarus, all the scary stuff out there. We're putting in higher lows. XLF. So this is ground zero for the March 2023 U.S. banking crisis. Charts look pretty bad, but zooming out to a weekly, 30 is support, 200 week moving average. Technical analysis principle. Support is support is support until it's broken. So we have to respect support, especially big support like this $30 level. This was resistance previously, turned into support. Support held here, and then support again. So bulls have a chance here. They have a chance to turn this back up, to hold the support level and rally off this support level. Now, obviously, we don't want to hang out down at this 30 level for a long time because it's been tested now multiple times in the last year. But the bulls have a chance. Last week's candlestick is called a spinning top. So a spinning top at support after a big down move, that gives you a chance of a bottoming reversal coming. So we have to watch that. I mentioned IBKR last weekend. Again, support at 75 held here. This stock is still in an uptrend. So this is a financial, this is a broker. This is the area of the market that people are most bearish on. Still in an uptrend, support held. So we have to add up all this evidence across charts and say, interesting. That support is holding in all these charts. Caterpillar, same thing, holding above the 200-day moving average. Support is holding so far. Support's around 210. Just chart after chart, right? It's the same setup. Support held last week against this macro backdrop of extreme fear and bearish headlines, right? Freeport McMoran, same thing. 200-day moving average held as support. We cut a bounce off support. Does that mean that these charts have to go straight up because they held support? No, absolutely not. Remember that we're largely in a range bound environment. So after big sell-offs, buyers come in at critical support levels. We get a bounce. That bounce could be 10%, it could be 15%, and then we sell off again. And we trade in this oscillating range, up, down, up, down, up, down. But at some point, this range is going to have to resolve, right? I don't think the S&P can stay at 4,000 forever. Could it stay at 4,000 for another couple of weeks? Absolutely. But at some point here over the coming months, this is going to resolve. And at this point, the evidence is tilting 60-40, 65-35 is tilting towards a resolution higher. I know, not what most people want to hear. Most people are bearish. They want to see S&P drop to 3,500 or whatever. But I'm just calling it like I see it. 10-year yields. This is probably one of the most important charts out there. Look at this breakdown. So price is under 50 200-day moving averages. 3.4% is big yield support, breaking support. We need to keep an eye on this chart. If this stays under 3.4% and continues lower, then we know the Fed is done. Rate cuts are coming. That's rocket fuel for gold miners. That's rocket fuel for gold and silver. It remains to be seen what it means exactly for big cap stocks like in the S&P or even small caps like the Russell 2000, but most likely it's not a negative. Rate cuts coming, easing coming, right? Euro USD, so the dollar drives the bus, and if the Fed is now done and about to pause, and the ECB still has more rate hikes to go because they're behind the curve as usual, then we'd expect Euro USD to have a bias higher. WTI crude oil. So chart is ugly on multiple time frames, but forget about all that and just let's look at the big picture. So crude oil went from 35 to 130 and now back to 65. Seems like a pretty normal, well, it's very volatile, but this is a big correction it's had. And look to the left on the chart, long term, this is support. It's also the 200-week moving average. So whatever your macro doom and gloom wants to be, whichever technicians you're saying who are telling you crude's going to 50 or whatever, the fact is 65 is major long-term support. Shorter term time frames, crude oil is pretty oversold. I don't know. Daily sentiment index is 17. It's not a complete capitulation washout, but it's pretty negative. I would be looking at energy long setups. Notice how well Peabody Energy is holding up big picture, right? And then look at their financials, man. I mean, I'm not a big fan of coal, but I can't ignore the profitability here, the low valuation ratios, um, the balance sheet. I mean, this company's spitting out cash, right? And really, if you look at a lot like Suncor, so this is oil sands, Teck, obviously mining, but with some coal, and then Peabody, you have a situation where these stocks are priced for a recession. They're priced for a deep recession, energy transition happening very quickly, phasing out coal, phasing out oil. What if it takes longer? I mean, what if oil stays above 70 for another few years? What if coal stays, reasonably high for another several years? Then these companies are just cash cows. And yeah, so just like now with the XLE, you could say, well, this is a double top here. It rolled over, caught a bounce. Yeah, so the technicals on the energy sector are a little more challenging than some of those other charts that are a little more washed out. This decline is a little fresher, but the same thing I could say, like bulls have a chance here to hold these lows and rally. And Friday, the XLE made a higher low. So every bottom starts with a higher low. Low, higher low, higher low, right? Every bottom starts with a higher low. So bills have a chance in so many places of the market to turn this around into quarter end. Now, turning to gold, this is a monthly chart, 20-year. I mean, self-evident. This is big. This is big stuff. This 2000 level. This is enormous. Enormous from a technical perspective, enormous from a psychological perspective, enormous in so many ways. It's obviously a very strong uptrend. So all those idiots out there who bash gold, nothing but negative. Oh, gold's not an inflation hedge. Well, look at the fucking chart, man. Look at the 20-year chart. This is 300 to 2000 for something that doesn't pay a dividend, no business, no earnings. 300 to 2000 in 20 years. That's beating the inflation rate by a mile, right? Now, what's next? Big question. I don't know, but I do know that this monthly close is huge. Huge, huge, as Trump would say. Right now, the monthly is forming a bullish engulfing. The quarterly, which I don't have here, but you can pull it up, is also a beauty. This is month end coming up. This is quarter end. This is big stuff. And obviously, $2,000 is a big level. Okay. So here's what I'll say. A monthly quarterly close above 1950 is a win for the bulls. Monthly quarterly close above 2000 is enormous, monumental. Okay, that's a breakout on every time frame. Close above 2000. If we slide back under 1950 for Friday's close, then suddenly you're going to have a lot of technicians saying, uh-oh, another failure on another $2,000 test, and the monthly candlestick has a long upper wick to it. So this is a big week for gold. It's a big, big week for gold. And the things that are going to drive it are going to be this chart, this chart, right? But if this breakout materializes, then I think we're in a situation where the gold miners can make new 2023 highs and probably new 52-week highs in April. So this is the gold bugs index, the Huey. This is the big level, the January peak in the Huey. Look to the left, it kind of correlates with the June peak. So 265, 270 area in the HUI gold bugs index. That is the level. So we need to break above that, and it's just all systems go. Silver. So this is not a perfect trend line because of this, but it's the essence of the trend line that matters more than the precision of it. And it lines up with the 2450 area. Silver needs to break above that 2450 level. These January highs. So January highs in silver, January highs in the Huey Gold Bugs Index, 2000 level in gold. All this stuff is huge, huge, huge. Silver, the caught date is interesting because it's about to trigger a caught buy signal. And by that, I mean, okay, so you have the large speculators going net short and then flipping long again, just like they did back in September. That led to the 1750 to 2450 rally. And on top of that, you have managed money doing the same thing. So in many ways, these two categories overlap, but the confirmation of both managed money flipping short and then going net long, large specs, flipping short, going net long. And you can look back, that has very often led to strong moves higher in silver. And the large specs are nowhere near extreme positioning, net long 3,400 contracts. These guys can get up to above 50,000 contracts net length before we get frothy. So silver has a ways to go here. So there's a lot of things lining up, including the fact that I don't think anybody owns gold miners in any meaningful size. I don't think anybody's convinced that gold that this breakout move above $2,000 is going to hold. It's for real, right? So this week is a big week because if it happens, it could lead to very big moves in the miners. Newmont, I mean, this was one of the worst stocks in 2022. It bottomed in November. This looks like a higher low to me. It's just beginning to move up above the moving averages, and the moving averages will start to curl higher. So you have the makings of a bottom here. And obviously that's the biggest gold producer, but look at the mid tiers like Equinox, IAMGOLD. These stocks are in uptrends, right? They're above rising 5,200 moving averages. The 50 is clearly turning up. And look at Equinox. I mean, so this would be a stock that's not priced for a $2,000 gold environment. So if the breakout in gold is for real, if it sticks, if it continues, then yeah, this could be a $7-8 stock. And just look at the bottom here. So this is a big 12-month rounding bottom. You can draw a line right here in the chart. Very clear breakout level. Look at that. This is the July high, and this is the January high. It's just, we're right there. So this breaks out. It's going to $6, maybe even filling this gap up near 7, right? There's a lot of upside here in these charts. Obviously, I mentioned big call option buying in IAMGOLD last week, $5 strike calls. Obviously, January 2024, so the person has some time to be right about that. But interesting setup. Very interesting setup. I would put this sort of the top of the list for breakouts to watch next week, because if this actually happens, then that's going to be a major confirmation for the gold sector overall. Moving on, I just want to show this research report very quickly. Morgan Stanley, untangling supply chain linkages. The gist of this is that India, Vietnam, Thailand, Mexico are going to benefit from the U.S. confrontation with China and the diversification of supply chain of the West's supply chains. So India is the one I picked out from this. I would say the two that I like the most would be India and Mexico. India I picked out. Look at this. This is the INDA iShares India. This is like a $5 billion AUM exchange traded fund. And just look, 200-week moving average. It's obviously dropped like many market indexes in the last year or so, coming right into the rising 200-week moving average. So that would be a place to be a buyer of a long-term secular bull market. So maybe India look at the daily. This is one of the big components of the IND. Super oversold, straight down since February. It's not super cheap. Expense ratio 0.68%, but this is a simple way to get exposure to India in a long-term account. So again, I'm pulling up weekly charts here. I'm not talking about this for a trade. I'm talking about 12 plus month investment horizon. This is something to put in, a retirement account where you could make 20, 30, 40% over the next couple of years with, I would say, pretty low risk. I mean, could this drop back to 35? Yeah, maybe 10% or so of downside. But this is a compelling piece of research that we are going to have to diversify our supply chains, and India will be a big beneficiary, especially because they are pretty good ally of the US, English speaking country, obviously the UK Commonwealth, history to the country. There's a lot of natural advantages that India has. So just tossing that out there as an idea. And I think this video is long enough now. I've hit all the key points, and I'll just wrap up with be greedy when others are fearful. So that's a broad statement. Warren Buffett obviously coined that. And I just see a lot of people that are paralyzed with fear right now. And there's a lot of setups that are taking shape out there. Obviously, I'm not saying to throw caution to the wind, but I'm saying to sort of put that fear on hold for a second and really think more deeply about things. Don't just be paralyzed by tweets and news headlines. There's a lot of things in flux right now, and there could be some very big opportunities that are shaping up over the coming days and weeks. And obviously, I've highlighted several of them. So I hope this video adds some value to your process, and have a great weekend. I'll see you in the trading lab.